Most traders overcomplicate volume profile and end up missing the only levels that actually matter. In reality, you only need to focus on 3 key levels to understand where price is likely to react. In this video, I'm going to break down the value area high, the value area low, and the point of control, and show you exactly why price consistently reacts at these levels. So let's dive right in. There are only 2 volume profiles that we need to be focusing on if you want to trade the New York session, which is the previous day RTH volume profile and the overnight volume profile. But for the sake of this video, we're just going to focus on the previous day RTH volume profile. Let's start off with the POC. Most people think that the POC is the most traded level and has the highest probability of working out in terms of rejections or break and retest trades. And that is simply not the case. The point of control is the level where the most volume has been transacted. And the point of control is always within the value area high and the value area low, meaning that the point of control is fair value. And a common mistake that I've mentioned in a previous video is trading inside of the value range and trading at the POC. Because one thing that is really key in trading is selling where price is expensive and buying where price is cheap. We just need to try and follow what the big institutions, the big traders in the market with huge positions have done previously. So the POC is definitely not a level where you should be looking to enter trades. It's more a level to understand, first of all, context, and also use it for target. The value area high from the previous RTH session shows us that in that session, the big players in the market thought that this was a price level that was expensive enough to sell. The value area low shows us that in the previous RTH session, the big players thought it was cheap to buy. And these 2 levels have the highest probability of working out in terms of, first of all, rejections and also a break and retest continuation. In order to use these levels properly, you need to understand the most important thing, which is where does the New York session open? Is it opening above the value area high? Is it opening below the value area low? Or is it opening inside of the value area? Knowing this, you actually know how to build trade scenarios for your pre-market plan and how to treat these levels accordingly. Because in the end, it's all about, is it accepting prices higher or lower? Or is it rejecting prices higher or lower? In this case, you can see that New York was opening right here, which is way above the value area high, which means that they are potentially accepting more expensive prices. Knowing this, we have more a bullish bias for the day. So all we need to do is wait for our value area high level to get hit. Once price hits our level, then we obviously use order flow, as I mentioned in a previous video, and show you exactly how to do that step by step. We can find potential long entries. If the New York session will be opening inside of value, the first thing that I'll be looking to do is I'll try to sell at the value area high and I'll be looking to buy at the value area low. First idea would be a rejection trade setup. If we don't see confirmation with order flow and we see that price breaks through this level very strongly with heavy buying, it might be that they're accepting prices more expensive. Then all we need to do is wait for a retest, look for order flow confirmation, and try to enter a long position. Same for the sell side. If sellers will be very aggressive and slice through this level, only thing we need to do is wait for a retest, wait for order flow confirmation to go short, and try a short position, as sellers might be trying to accept prices lower. If New York would be opening below the value area low, the first trade idea would be a rejection of the value area low, try and get short. But if sellers are not strong enough and buyers are willing to push the price higher as they think this is a cheap area to buy, we might wait just for a breakout back inside the value, wait again for a retest, wait for order flow confirmation, try to go long. These levels honestly have the highest probability of working out. The only thing you need to really keep in mind is, where does New York open? Is it opening above? Is it opening inside? Or is it opening below the value area? And the second question you need to ask yourself, is it accepting prices or is it rejecting prices? Knowing this and being willing to be patient in the market to wait for your levels to get hit and get the right order flow confirmation, you will usually get multiple trade setups in a single day just off 2 levels. In the end, it's all about keeping it simple, having the strongest level in the market based off volume, and willing to be patient, wait for your levels to get hit, and then see a order flow confirmation to have the highest probability entry setup possible. And always keeping in mind the location of the New York open. Is it above? Is it below? Is it inside a value? And treat these levels according to where the New York session opens. Keeping these things in mind, I promise you in the long term, you have a great probability of becoming a profitable trader by keeping it simple with a step-by-step process. If you want to learn my full volume profile and order flow strategy that I use on a day-to-day basis to scalp and queue, check the link in the description for one-on-one coaching. So anyways guys, I hope you thought this video was helpful. If you did, please leave a like and subscribe to the channel. If you have any questions, let me know in the comments down below, and I will see you in a next video.